Hello and welcome. I'm in conversation with Anup Maheshwari. He's the EVP and Head of Equities at DSP BlackRock Investment Managers. Anup, thanks for speaking with us. Anup, you spoke about a traffic signal. It's green for growth, reforms, and liquidity, but it's amber, if not red, for valuations. How do you read valuations? A comment on that, and based on that, do you expect the markets to see a time-wise correction, if not a price-wise one?
So valuations generally, you've got to look at it from a market cap context, because over the last 3 years, as you've gone down the market cap chain, valuations have become more expensive. So smaller companies have become a lot more expensive than some of the larger companies. So our concern area is in some really small companies which are too aggressively priced. Then it does become a bit of a challenge in terms of future returns. These companies might be very good. It's not questioning the company really, but we have to make sure that there's a return potential from it. But as you go up the market cap chain, we're not seeing valuations being as stretched.
Right.
So they're definitely higher than they were a few years ago. So to that extent, it's not as green as it was 3 years ago as a signal. But there are enough bottom-up opportunities as you go up the market cap chain. We think that are still worth looking at. But we do recognize that we need earnings growth to pick up pretty quickly to justify some of the valuations that exist today. We're pretty confident that earnings growth will come through. But there is a bit of forward pricing of that in the markets already.
Right.
So having said all that, frankly, I think for investors, there's a lot of interest in equities at the moment. There's a lot of money chasing markets today, which can tend to push markets more than we normally would like.
Right.
So there is always this challenge of ideally what valuations you want to buy something at versus the reality of the market. So we do think right now it's still, if you take a slightly longer term view and you have earnings growing over the next 5 years, then you can pretty much justify some of the valuations existing even today.
Right. You also mentioned that corporate earnings, when taken as a ratio to the GDP, are at 10-year lows. And you are expecting earnings to return over the next couple of years. In fact, it could be over 20%. Then what is it that's going to drive earnings going forward?
So in the very immediate term, in the next 1 year, there's a lot of reversion to mean happening, which is creating this potential for 20% plus earnings growth.
Right.
So it's coming mainly from, let's say, some of the banks that have reported a drop in profits in the last few years. So some of those profits coming back. Similarly, commodity stocks. So we've seen there are about 7 or 8 names that can, just because of a base effect, are creating growth in the coming year.
Right.
What will be more important is after this base effect plays itself out, from there on, do you continue to maintain growth or not? So that's something we have to keep evaluating from stage to stage. But right now, we do feel that next year should be a higher growth year. And as of now, even FY19, at least from corporate commentary, seems to be on the rising path, not on the falling path. Hopefully, we'll have a capex cycle come up somewhere 2-3 years down the road, and that should also help in terms of earnings growth subsequently. So earnings-wise, I think we're a little more comfortable of the coming year, and then we have to keep reevaluating to see whether that sustains or not.
Just a couple more questions. I also want to talk about global factors here. And we know there was talk that not all the geopolitical aspects have been completely been priced into our markets. Based on that, what are those factors that could determine the direction of the markets going forward?
I think geopolitical is sort of very difficult to predict, honestly.
Yes.
I think the way we see geopolitical factors are they often come unannounced. I mean, we're aware of a lot of conversation the world over about some tensions in various regions in the world.
Sure.
And politically, dispensations are a lot more aggressive at this stage. We've got some problems with our own neighbors at the moment. So these things are, it's a little difficult to gauge, frankly, how out of hand they can get at a point in time.
Right.
But the feeling is that ideally, if they just stay the way they are, then markets will focus more on corporate earnings. But if you have any blow up there, in the short run, what tends to happen is, people tend to forget about earnings and tend to focus. And in the short run, tends to be very psychological for markets and very position driven. So if you have an event like that, you may get a correction. But then the key question to ask is, does this impact corporate earnings fundamentally or structurally in any way?
Right.
And if the answer is no, then that's an opportunity to buy. That's the way we normally see these events.
Okay. And coming back to the aspect that you were talking about, going up the value chain, that is with respect to market capitalization, are you, to a certain extent, suggesting that there is more value in the larger caps, and that is possibly a safer place to play right now as compared to the relatively smaller ones?
Yeah, absolutely. That's exactly what I'm saying. The larger caps, I mean, again, there are some interesting opportunities there itself. And if you have high liquidity, cheaper valuations, more stable companies who can withstand negative cycles better,
Right.
then it's always an interesting place to look at. I mean, that would be your first port of call. That's not to say there aren't very good. There are some fantastic companies as you go down the market cap chain, some
Yes.
wonderful evolving new companies coming through, great entrepreneurship. But we've got to look at some of these in the context of the price that we are already paying for them. And there's no doubt that the valuations today are considerably higher, than what we would normally have paid if you rewind back just a few years ago. So I think we're finding more opportunities within the top 300 by market cap.
Okay.
Is the way I'd put it. Yeah.
Anup Maheshwari, it was a pleasure speaking with you. Thank you very much for your time.